What does it mean? You know, a few weeks ago, I started the real estate definition Wild Wednesday. And today I have 3 that I want to talk about. 3. So get out your paper and pen and start writing these down because these are important. If you're a home buyer or a home seller who's looking to do a refinance, these are some of the words that you need to understand. So I'm going to start with this first one. Have you ever heard of PITI? PITI? PITI is an acronym for the 4 primary components of a monthly mortgage payment: principal, interest, taxes, and insurance. 4 things. So when you're making your mortgage payment, you're reducing your principal. So you're reducing your principal, and you'll find, on your mortgage statement, you'll see your principal and interest, and how much you're paying on interest and how much you're paying on principal each month. Keep a note of that. 30 years, you'll notice the principal will go down, the interest rate will be there. If there's any changes, if you didn't have a fixed rate, if you had an adjustable, you'll see a change in the interest rate. That's number 1. Any questions? Make a note down below or give me a call. Number 2, qualifying ratios. What the heck is that? It's a calculation that's used to determine the loan amount that a borrower qualifies for. Typically, a comparison of the buyer's total monthly income to monthly debt payments and other recurring monthly obligations. So, if you've ever heard of the concept debt ratio, your monthly income, let's say, is $5,000, and you have, I don't know, $2,000 worth of bills each month, whatever that means. So you're going to be looking at $3,000 a month is what you'll have available. But that's what they're going to be looking at, the difference between your income less your bills. Your income less your bills. So there's a ratio between them. Remember when you were doing math and you were doing algebra and they're talking about ratios and you said, what will I need this for? This is why. And your lender should be able to explain that to you and show you what your ratio looks like. Number 3, the last one for today. Underwriting. I've talked about it before. The underwriters, you put your your loan package together. You have all of your financial information, your bank statements, your pay stubs, your last 2 years of taxes, any retirement funds that you might have. All of that gets packaged up by your loan rep and sent to what we call an underwriter. Underwriting is the process to determine the loan approval. It involves evaluating the property and the borrower's credit and the ability to pay the mortgage. So remember when I suggest as a buyer, I said, I want you to talk to the lender. Your lender's going to need all those papers, plus they're going to need, you're going to give them permission to pull your credit, because your credit score is going to be very important when it comes to the type of loan you're going to get. So there are loans, FHA has loans where your credit score can be in the 600 range, conventional 750 and above. So conventional only means that you can have you have actually a lower debt ratio, and at FHA you have a higher debt ratio. Go figure. FHA wants to make sure that everybody becomes a homeowner to some extent, but you still need to qualify. This is not like it was years ago when people were giving loans and they couldn't afford them. This is not it. Since then, the lenders are being very, very picky on how they're doing their loans. So if you're looking to purchase, or if you're looking to do a refi, Now is the time to talk to a mortgage lender to get a better idea of where you stand, what your PITI is, what your qualifying ratios are going to look like, and what the underwriter is going to say about all this. Need any referrals for lenders? I've got some. So send me a message, give me a call, let me know how I can help guide you. The other thing I just want to remind you is I'm not AI. I'm real. It's really Carol. And it's a wild Wednesday. So call me, Carol Gilles, Fredericks Realty, 310-864-9738. Have a great wild Wednesday. Oh, and next week, office meeting, and we're going to get updates on loans. So I'm going to do an interview with our friend Jonathan Kawagia of Alliance Mortgage. So stay tuned for next Wednesday. Bye, everybody.